Good evening. It's Brian Paragamian, Senior Trader of ProfessionalStockTraderLive.com, bringing you Wednesday evening's technical analysis update. Well, it sounds like the same rendition every couple days. Earnings come out, they're not too good. Economic news is reported, not that good. We've got government initiatives aimed at fixing the world. The market's not really too pleased at that. So intermittently we get stock market rallies and then they fade. Today the same thing happened again. The market opened higher, backed off to unchanged, forged ahead again, gave up all the rally, started breaking support levels, and had a near 200-point reverse, closed the day down 121 points. Some of the contributors to this negative action were Kraft. Kraft came out with disappointing earnings, down 263 as you can see here. Disney, they came out with disappointing earnings. The stock closed down $1.62. Tonight now, after the market closed, we had Visa come in with earnings. Seemed like everything came in kind of in line with what they were expecting. The stock is reacting positively in the aftermarket. You can see up 3.5 points or so. Cisco, they came in with earnings in the technology sector, in line pretty much with everything. They're comfortable with their earnings projections and their growth revenues. Cisco trading down slightly here in the aftermarket, some 50 cents. But I think Cisco is a place with having almost $30 billion in cash and very little debt on the books. I think if one's looking to find a place to be in technology, I think Cisco is a spot that one can really look at. But having said that, let's get into a couple of trading ideas. Well, and maybe before we get into that, let's make note that gold was another stellar performer today, closing trading right here now in the aftermarket, up $14. It closed up, I believe, some $12 during regular day session, currently up 14. Oil, again, down 53 cents. Reserves built, inventory reserves built on oil, crude oil inventories, and again, oil shot down after the the report came out, stabilized, turned back up on the day, and when the market succumbed to pressure again, oil dropped. And again, our feelings have been, as the stock market goes, so does oil, and at some point we'll see a separation. But again, it certainly appears that way. Stock market sells off, oil's down. So let's get into, off that oil comment, let's get right into a oil-related stock, Transocean Limited here. We're looking at a one-year chart, and let's zoom in on this just a little bit here. Right here we can see, despite oil being down, I'm going to go ahead and punch in a quote here. Rig closed up on the day at $1.56 at 55.25. And if we look at the chart here on it, it's getting ready to break out of a 6-week base here, despite oil still being down towards its much lower end range. We see rig here reclaiming its 50 and 20-day moving average here, the white line being the 50 and the 20-day being the blue line here. And we see now how it probed again this upper range here in the 57.25 area. And we think if this stock starts taking out 57.25 in earnest, we think the stock will have some room to run on the upside, and it'll probably do it in a hurry. This is a stock that can really move, can trade up $3 and $4 on a day. It can also trade down $3 and $4 on a day. So I want to make you aware that this is a stock that's very volatile. But as we can see here, the stock is not overbought at all. It's in mid-range of the RSI with a 60 reading. And if we move this over to another chart and take a look at the stochastics, we can see while it is in the upper end of the neutral range here, we can see that it's ready to turn back onto a buy signal. So we certainly like this setup with the stock ready and poised to break out above this 57.25 area. Now again, we're still 2 points away from it, so be cognizant of the fact if it does get up there, say tomorrow, that the stock at that point will already be up $2 on the day. So you may want to let the stock break out, pull back, and then look to re-enter this. But again, it looks like it's ready to turn itself onto a buy signal here. We haven't got an official buy signal yet on it, but I like the fact that it has regained its 50-day and its 20-day moving average, and it's been holding above it for the last 5 or 6 trading days here. And we think the stock is one to put on your radar that's looking like it's getting ready to start breaking out of its 6-week base, even though oil has not been performing that great. And now we're going to look at a stock that we have been pounding on the short side, and it is Wynn Resorts. And Wynn Resorts is one that we now are, quite frankly, looking at going the other way on. And why are we looking at it going the other way? Well, as you can see here, and let me zoom in on this picture just a little bit, we're now at the bottom of the Bollinger Band on Wynn Resorts as we are probing it today, down in this low 25 area. The stock also has now put in 5 consecutive days. Well, I shouldn't say 5 consecutive days without a higher high because we've got one here. But the stock has put in 5 losing sessions here in a row as we've closed down. Today, the stock was down over $2.50, $3 at one time. And a brokerage firm came out and said today was the bottom in the stock. Well, the stock stabilized for a few moments, then went down, took out the lows of the day before rebounding $2 and then settling back into the close. And let's get the closing quote here on Wynn. It closed at $26.23, down $2.59. But we like the fact that if we look at over here on the right-hand chart, we like the fact that the stochastics are turning back up onto a buy signal, and they did that today despite the stock being down $2.59. So we would be on the lookout for this stock to start to stabilize in here in bad market conditions, and we would then look to get long the stock as it starts moving up off a basing pattern on an intraday pattern. So what we're saying is if the stock market overall, say the Dow is down tomorrow, and we start seeing Wynn acting better and not getting hit, or is down maybe slightly and is not taking out the lows from today, and it starts just forming a base on a 10-minute period tomorrow while the rest of the market continues to move down, we would look to enter this stock on a long trade and run tight stops based on the intraday pattern of the stock itself. But here's a stock we think is very close to turning back up for a trade. Now keep in mind, they do have earnings coming out next Thursday. And I think what you might find is, you might find between now and then, the stock stabilizing and rallying a little bit in front of those earnings, maybe before softening up right before them. But I think a lot of people who have been short the stock into this plunge, and any continued pressure in it, may look to cover some positions in front of the earnings, considering the stock is probing the mid-20s, right into that level where we thought it could get. So this is a stock we certainly would look at and put on our radar for being long. Again, this is a very volatile name, so do your due diligence on the charts, let the stock set up, and look to be a buyer on this in the coming days. So we think this is a excellent opportunity here on this stock, and the fact that we had a brokerage firm come out and call a bottom in it, we think might lend a little bit of support in the stock. So again, let's be patient on this setup here. Let's watch what it does into continued market weakness, and let the stock set itself up before entering. We're not suggesting that you just go out and buy this here right away. You got to let the stock set itself up on a daily pattern and see how it acts in a weakness. But this is one we've got on our long radar at looking at playing from the long side. So we don't really have anything else to talk about or that we want to get into. Our two ideas are RIG, RIG, that we're looking at playing from the long side. And let's just go again and look at this chart here. We're looking for a break above this 57.25 area to get long. And then again, Wynn Resorts, the charts we just looked at, we think that needs to be on our long radar as well. As far as our overall expectations of the market, we think the market is going to stay range-bound until there's any real big economic event or some surprise that catapults us into a more breakdown mode or into a more of a breakout mode. Thanks for joining us. We'll see you in the morning at 8:20 for our live webcast. And those of you that have yet to join us, please make the time. We think it's great for you to tune in, watch what we have to say, start becoming educated, and start learning. Thanks for listening tonight. Have a good evening, and we'll see you in the morning.